All right. Good morning, everybody, and welcome back to Engineering the Markets. My name is Jared. It is January 24th, 2022. And as always, wanted to give just an initial sort of thanks. Been getting some feedback from sort of the beginning of the year and really appreciate some of the kind words and suggestions for how to make this show more engaging, more impactful, along with some of the actual results of people using some of the concepts discussed here to better their trading, to evaluate the market differently, and just to have more tools in the tool belt. So really appreciate it. And with that, let's go ahead and dive right into a market in a bit of a turmoil situation in regards to our downside. So as always, I like to start off with the SPX expected move for the week. The idea that the S&P 500 index is one of the largest option markets out there. The expected move for this particular index is very impactful for how certain market participants both hedge along with control dynamic risk inside of essentially their delta neutral portfolios. And seeing some of the expected movement versus the actual movement can give you a sense of how powerful breaches or breakdowns in this market can be. Now, last week, it is no surprise that the market had a very impactful sell-off. We essentially saw a short trading week. We were coming off of Monday's MLK Junior Day. And overall, the market was pricing in approximately an $86 expected move. Now, on a normal week, the more probabilistic scenario is that when you are within your expected move and you have a breach, you often want to consider the idea that the market likes to return to the expected move. You might get a little bit far out, basically stretching that rubber band. But as statistics prove, the more probabilistic event is you stay within those bounds. And what we noted last week was it was a short week with a larger than average expected move, which was a bit odd. We didn't really put a lot of weight into that until we saw some of the testing of the downside movement. We also noted that on Monday, the market drew down to the lower bound, Tuesday, market drew down to the lower bound of the expected move. And once again, bit of an oddity, the market seemingly trying to test this risk parameter along with some other technical structures that we noted last week. And then, of course, as we were breaching, the idea that the market started to correlate. We saw volatility expand to the upside, and this can be seen in multiple different ways. The VIX, of course, being one of the key ones that a lot of traders use, but we'll look at volatility futures in just a moment. And then as we started to get into that 2 sigma range, essentially the market starting to stretch the rubber band as far as it could go, we did eventually snap. And what was supposed to be an $86 expected move turned into an actual price movement of 265 points for the S&P 500, essentially a 3 sigma event. Now, as with any statistical model, there's going to be outlier cases. There's always going to be the time where something is different. And when it comes to a 3 sigma move, if we're talking probabilities here, this is essentially lower than a 1 in 100 chance in regards to the expected move week in and week out. So it is an outlier. It is something different. Market is throwing up some risk. And in regards to that risk, we want to take advantage both of the larger than average movement in this market, along with understanding that this risk is not necessarily over. As we shift into this week, we're looking at a market that has tried to adjust some of this volatility into this week's expected move. And as we can see, the market has essentially doubled the expected move for the week. Market closed at approximately 43.97. When we look at the actual move, that is the pricing from close to close. So I'm not taking into account any topping or bottoming tails that might have occurred. In this case, a very small bottoming tail. And as we look at this week's expected move, we're pricing in about that 45.48. We'll call it 45.50 for the purpose of conversation, into 42.50. Now, as you can see, this expected move is much wider, and we have reason to believe that this week is going to continue in the volatility. Obviously, there are new catalysts this week. We have the likes of multiple large market cap names reporting earnings. We also have the FOMC meeting and the eventual discussion from Federal Chair Jerome Powell on Wednesday. All of these things are market events that can shake up what is currently occurring, and this volatility is likely to remain elevated until some of these events have either subsided or even passed through the market, with, of course, the reaction being the thing that we're most interested in playing, not necessarily what is being discussed. So, market's looking at a larger than average expected move. And when we shift over into our SPY, that of course was seen last week with the type of elevated volume and downside movement we got. Obviously, people are starting to call oversold. We're looking at a breakdown in the technical structure in regards to our first sort of distribution event in this market. We called out last week the idea of a head and shoulder formation, very distributive in nature. You'll also note that the selling volume has been much wider in these upper bound ranges, basically low volume expansion, high volume downside retracement. And that is often indicative of a more distributive event. You're often going to see lots of volatility, lots of chop as the market tries to finish a transactional range. And then, of course, the breakdown, how that happens, and the speed of that breakdown, giving you very clear clues that this was more distributive in nature, of which, of course, there's going to be downside targets. If I'm just looking at year to date, sort of the high to low marking this downside target, the market still may have a bit more pressure before we hit that eventual low, looking at approximately 435 in the SPY. And this brings up a lot of different ways to evaluate a possible bottom forming in this market. First and foremost, volume profile. Where have larger transactions occurred on previous rallies? The idea of sort of a demand zone. Where did the market bottom before? Are we simply testing these lower bound ranges on this waterfall sell-off? And from there, can the market put up some better defense? If we look back at low September, early October, this is amidst sort of the shakeup in the Evergrande crisis in China, along with some additional hawkish discussions from the Fed starting to come to fruition, or starting to come to, I would say, to the market, not necessarily to fruition. Certainly some structure here to keep an eye on. And as we start to see the market sell into this 435 print, this is where this possible bottom can start to form with previous lows in the market as a guide. We also note that the volume is quite high on Friday. Now, I wanted to discuss that just briefly for those unfamiliar. Last Friday was a fairly significant option expiry day. Not only did we have 2 option series expiring in the S&Ps, we had an AM and sort of the normal weekly expiration, but it was also a relatively large overall option expiry day, the largest that I believe the market has ever had. And this is across both the S&P itself, related products like ES futures and SPX options, so index options. And then, of course, just your candidate stocks across the board, any stock that has a larger significance to the S&P, lots of expiry volume, which is either rolling or, of course, taking off for profit and loss and just adjusting where risk is. So, market coming into this area of interest. Of course, the mentality of the market has changed quite significantly. If you were anything like me and using the weekend to maybe see how the sentiment has changed, it's very easy to spot how quickly things have evolved. If you looked back maybe 2 weeks in the past, everyone just came off of a new all-time high. People were calling for another buy the dip opportunity. Of course, this general neckline was starting to act as that possible trap. And the sentiment, of course, just became the norm of market just made a new all-time high. Why would I be bearish quite yet? But as we see, there was some breakdown in this technical structure occurring. We were seeing breaches of the 50 more frequent. And of course, the market was able to recover from these breaches, but our more important previous all-time high, where we were coming from in the first place, started to put up the idea that a short the rip opportunity might be taking place. This is the first time we've really seen a very significant sell the bounce have the type of follow through that the market gave last week. The more recent example being that gap down from September, basically selling into the 50 and then seeing a little bit of follow through, basically a retest of swing lows before the market eventually made new all-time highs. So when you start to think about the sentiment of the market from this event and think about the idea above where we currently are, it starts to change sort of the idea of trading in this market. And the idea being that we now have overhead supply. This is one of the few times in the most recent S&P bull market where we've had significant overhead supply that if we bounce, and I'm talking if because we haven't quite yet seen any sort of bottoming action, but if we bounce, the idea that a lot of people are trapped above us changes the way that we might consider our next move in this market. Understand that a bounce in the market, especially in a downtrend, are some of the more powerful retracements. They can often provide significant recovery rallies. We're talking the likes of even back testing our trend line. And I'll keep bringing this up as sort of the idea to watch. Where did the selling begin? Where are we going? And then when or if a bounce occurs, where can this bounce take us? Where are some possible targets if we do decide to step in long? Sorry, lost my train of thought there. What would facilitate some of that? Obviously, you want to see it across multiple indices. If this market is going to bounce, you want to see it in sort of a full court press. The idea of maybe a correlated recovery bottom. Because what type of selling we've been seeing has been correlated to the downside. This is essentially not selling tech, not selling just financials and healthcare, just selling large sectors, but instead selling baskets of stocks, the entire market as a whole, selling all sectors pretty much unequivocally, and even our strong bull leads finally taking some of the hit. Understand that this is not necessarily an indication that we have lost all sector strength, but correlated selling will often break or start the pullback process of even your lead bulls. And in this case, energy is no doubt our lead bull sector. If we look at year-to-date performance or anything that just showcases the relative strength, this will be quite evident. Do this real quick. Just change it to today's date. We can see the likes of that relative performance in terms of percentages. Even with this most recent pullback, we're talking about an index ETF that has gained 10% overall from year start. And you compare that with other sectors, most of which are down, similar to the S&Ps, some of which have been hit harder overall, along with some that are actually providing that selling pressure in terms of market cap weighted percentage. So not necessarily that there is nowhere to run, nowhere to hide in this equity market, but the correlated selling is sort of blind to relative strength and relative weakness. It's blind to technicals. The idea that technicals start to really fall apart in those types of events. And what you're looking for is the realignment of, in the case of a long opportunity, the realignment of all of your lead bull sectors, maybe financials coming back into the lower channel. This has been a conversation that we continue to bring up. The channel-based trading not only works, but has continued to provide opportunity in both directions. You can play this market however you wish to, but these opportunities are consistent. You play them until they fail, and when they fail, you step away from that structure and you look for the next important areas of interest to take place. So, yeah, bringing it back to the idea that if we do see a bounce this week, I think a lot of people are basically calling for, looking for it. They obviously don't want to step into selling that's gone too far, too fast. They don't want to get necessarily squeezed. They're not willing to short the market at key support. Basically, it's not within their trade book. They would much rather look for the reversal, or simply they're just a long bias trader in general. And that is certainly okay for this market. But understand that when you're in the throes of volatility, keeping your risk in check, however you decide to play, is one of the most important aspects of a market that's shifting. Essentially noting that this market has been in a very strong bull run for about 1.5 years, ever since COVID lows. Understand that if you have played the market correctly for the past year or so, and you want to protect what you have built, all the work you have put in regards to being long bias, basically playing the chart in front of you, hedging when necessary, and then ultimately noticing when something's different, getting out or looking to change your mindset if the market is starting to change around you, and playing things differently with the same core goal in mind, basically to increase your portfolio, to boost your retirement, to protect your capital, or basically to become an experienced trader. These are the moments where things are shifting, and noticing that shift early, noticing that shift and taking advantage of it, along with understanding that what has worked may no longer be applicable in this new market condition. We do not know that yet. We don't know necessarily what's coming, but understanding where we are and what has changed, what has broken, what is different, how to play the market moving forward in terms of risk and reward, targets, expectations for future movement, et cetera, et cetera. These are all things to consider. And hopefully you've spent the past week kind of looking at the market condition and thinking about some of those changes. I certainly have, and I think it's worthwhile, whether or not you're an intraday trader or a swing, core, even investor in this particular market. Now, some of the volatility expansion that we've seen, the most simple one that most people are going to be familiar with is the VIX. VIX has, of course, expanded pretty much in line with the selling on last week's session. We're seeing sort of a volatility event. Rivals, put this back to price. rivals our September and October lows. So worthwhile to consider that if the volatility spike occurred on a previous correction, that you may see the volatility return to these price levels. And I want to just highlight the type of similarities that previous corrections have had in regards to the VIX. Obviously, what occurred in March of this past year was a bit more impactful. It was a bit more of like a growth, speculative, sort of a breakdown in what was a very euphoric phase for the market. And the VIX certainly spiked much quicker. We're talking about a one-day spike here up into the 37 handle. But in regards to where the market sort of found its top, this VIX in particular sort of topping out at that 37.50, and then comparing it to some of the expansion that occurred this past September and October, approximately the 35 print being the high end. And of course, what did the market look like during that particular correction? One thing that's so interesting about this most recent sell-off is volatility in the VIX specifically is a bit lower, even though we're coming from a much more relative high. And of course, we're actually testing the same price levels as we did back in September, just in terms of the S&Ps and the NASDAQ. NASDAQ actually coming into that lower bound as of this morning. We're talking about very extreme lows that this market has placed. And I wanted to bring attention back to what worked in regards to when did the correction in the market stop, and what was a possible signal that flipped the market back into basically its bounce, whatever that bounce looks like, yet to be seen. One thing I like to look at is volatility futures. Now, if you've joined us for some of the webinars where we talked about how VIX is priced, the idea that volatility futures are what's driving VIX options and even the VIX pricing itself, and then just understanding the dynamic between a normal futures product. Essentially, whenever you have volatility futures in a normal state, they're going to look like most things in regards to contango. The idea that the market normally is structured in sort of a short term being priced lower than a long term, and what is often a fairly normal curve in regards to product depth. So your short-term VIX futures, you want to be thinking January and February, last couple of weeks, are going to be priced lower than your March. That makes sense. You should have higher risk with more time in the future. More risk should be priced further out in time. And of course, this starts to normalize along with some potential skew and tail end as you get further and further away from the spot price. What has occurred and what is some of the more high volatility that we're seeing is that we are no longer in a normal environment. We have flipped. We are what's called backwardation, inside backwardation in the volatility futures, which means that your Feb contract is priced higher than your March, which is priced higher than your April, et cetera, et cetera. The market sees higher risk short term relative to long term, at least in regards to evaluating this pricing model. And what that looks like is we have that flip that's occurred, your active contract priced higher than your March. And what did we see in September and October? Sort of the bull thesis that provided some of the recovery back in that time frame. We actually saw this volatility futures product go back into a normal state, going from backwardation to contango, or even just getting to a flattened state in regards to the week ahead. We do have a lot of volatility up and coming this week with earnings, with the Fed, and just a general sort of expectation of movement for the S&Ps. So for all the long bias traders out there, Have your technicals, have your levels, have everything that you normally use, and understand that this market is in the throes of volatility. Understand that the risk is higher. If you are correct in regards to a bounce, you do not have to be first. You do not have to buy into weakness. You don't even necessarily have to take share-based positions. Options are a great tool for this environment because it inherently keeps your risk defined. You don't have to worry about it. You can sleep well at night knowing that if the market crashes the next day, you're only going to lose X amount. That's the great thing about options. But if you're looking for a signal, if you're looking something that's not necessarily a candle structure, a high volume event, knowing whether a level is going to hold or not, these are all sort of arbitrary aspects of technical analysis. You may want to look to volatility futures. You may want to see if the risk is perpetuating. Because if it is, not only will this backwardation continue, but it's going to possibly get worse. We're going to get further and further apart. The market's going to continue to price in short-term risk much higher than long-term risk. And that's where things get more extreme than what we've seen. These are when spikes that are unforeseen, black swan type events can occur. And I'll just be frank here, we have not seen a relative bottom yet. There's no sign that this volatility is going to slow down. So knowing what's possible, whether it's something that's driven by economics or just the simple idea of margin in this market, the idea of margin call Monday, what can occur, being prepared for it, knowing the risk, evaluating yourself and your portfolio, knowing what you're willing to withstand and what you're willing to basically say, I don't know what's next. No one does. Waiting for the right signal and preparing yourself for that event, regardless of how it forms. There's been a lot of people who have been wrong the past week. Market was supposed to bottom, it didn't. Market was supposed to bottom the next day, it didn't. Market bounced, and then it didn't. Understand that these are all risk factors. Take them into account this week and know what your exposure looks like. As we get into earnings, we'll talk briefly about that. The idea that we have large market cap names. We have the likes of Microsoft on Tuesday. We have, just get a filter here as I wrap up. Microsoft on Tuesday after market, Tesla on Wednesday after market, Apple on Thursday, and that's of course ignoring every single other ticker in between. These are the big movers. This is going to be an important week for the market. Let's see what it gives us and be prepared for the unexpected. This is the theme for the week. Have yourself ready for whatever the market throws, and understand that if the market's telling you something, you better listen. So with that, trade safe. Stay tuned for more information this week. Obviously, stay tuned for pre-market prep, and we'll talk more tomorrow.
Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible weekend. Good morning, Norm. How are you doing today?
Hey, good morning, brother. I'm doing well. How are you? Hope you had a great weekend, man.
Had a really good weekend, man. Can't complain. And
Your camera's
yeah.
a little funky. I don't know if there's anything you can do about that.
Oh, yeah. Let me.
Looks like you're in a submarine and there's some blinds in the way. There
There we
you
go.
go.
There we go. A
Much
little
better.
refresh will help that out. Um, All right, guys, let's get to it. I mean, we've been in a very exciting market to say the least, right? I mean, it's
Yeah.
been just insane. So much going on, guys. So much going on last week. And I expect this week is going to be a whole lot of interesting stuff as well. So, with no delay, Norm, what can we expect from this market that's been, pretty wild?
Well, we got a big week. A lot of what's happened recently has to do with or tied directly or indirectly into inflation concerns. And inflation concerns leading to Fed tightening, FOMC policy changing. And we've got our first major FOMC meeting coming up. So that will begin tomorrow. The statement will be Wednesday, 2 p.m. Eastern, as always, followed 30 minutes later by Jerome Powell. The general consensus is that rates will not be raised this meeting, but you never know. But they will start discussing the path to raising rates, which I think most people predict will begin in uh, that will begin in March. So, but we don't know that. Those are just guesses by people in the financial industry, and some are more aggressive than others in what they think the Fed's going to do. So, that having been said, we get 9:45 market manufacturing PMI and market services PMI. Those will be at 9:45 a.m. this morning. That is the main data for the day we have coming up. Uh, Also, in other news, of course, Russia has been building troops on the Ukrainian border for some time, and that has ramped up with alerts going out over the weekend for Americas to get out and or avoid Ukraine, that they're not going to be able to be helped. So that's not helping things. And then tensions with China and Taiwan as well. Bitcoin crashing, just under 34,000 right now. So that's been a hell of a decline from the high 60s a few months ago. And yeah, so I could go on for the next hour just talking about this stuff, but that's the general idea of what's going on.
Yeah, it's a lot happening, guys. So definitely a busy week coming up. And so let's get right to it. All right, let's see what we have on our gappers list this morning, guys. A couple of things in the green, but for the most part, we have a whole lot here in the red this morning, right? Just a whole bunch of things down nicely today. So let's get rid of our watch list from Friday. Control A, Control X gets rid of that. And then let's go over here and look at what we have today. Let's start with Coles, KSS this morning. Now, this one is up 34%. So they're seeing some
Got a
green
big pop
action
on
this
Coles.
morning.
Yeah,
Um,
I finished my day about an hour ago thanks to Coles.
very nice, very nice.
Yeah, so Coles, there was rumors of buyouts, and this one usually when I say buyout, I run from it. I take it off the list without even looking any further. But in this particular case, it was an offer to buy out, I believe, by a private equity firm, and there's a second offer at a slightly higher price. One at 64, one at 65 are what is being said. So that having been said, and I've mentioned it before when we talk about buyouts, unless there is a bidding war or something of that nature, it's usually not a good trade. But this one happens to fall into that category. Might be interesting. I'm not seeing any. You'll see Macy's and Nordstrom on there. I'm not seeing any info on those. Retail's been a bit of a mess recently, so I don't. I think those are moving in sympathy with this one.
All right, that makes sense. Yeah, Coles definitely you can see a difference in volume and overall price action this morning, looking very nice. So we'll keep an eye on that one. And bot we have seen before low float that it's not doing a whole lot right now. So it has moved up in the past before. We've seen some activity out of this one, but for the most part, doesn't look great today.
Yeah,
UL, yeah.
I think this is a Wall Street Bets meme stock. They're
Oh,
talking
okay.
about
So
a
that was
short squeeze or something on it. I haven't
okay.
really gotten into it too much, but
definitely needs a whole lot more volume. Not looking too good at the moment. But again, with Wall Street, as you guys know, and that could change very, very fast. Just be careful on that one. Low flow sitting at 6.2. UL this morning, they are up nicely, 8%. I mean, look at this action
It's
last
trash.
week. What is going on here? It dropped to 49,
It's
sold off to
trash.
46. And now we're back right
Well,
back up.
so there's word that Nelson Peltz has taken a position in this. I mean, it's 2.5 billion share float out of the UK, trades like garbage. No, I'm not
Yeah.
even thinking about that one.
So we'll skip on this, guys. Again, it's just crazy daily there. Here's Macy's, as we mentioned, on this list just because of sympathy move, of course. There's nothing else that we see on it at the moment.
Somebody else sees something, let me know, but I haven't seen anything
Yeah,
on
yeah.
Macy's.
There's nothing happening on this one right now. I mean, guys, it looks interesting. And sometimes these sympathy plays can do very good. And sometimes Macy's right now has 1 million shares traded. That's a whole lot of volume. So could be a possible. Could be a possible.
Ron L.
Yeah.
He says it every time I bring up the UK stocks and how they don't trade wanker stocks.
That's a good one.
Throughout the British slang.
Yep. So Macy's, guys, you can put it on deck. You know, I think we're gonna have a whole lot once we get to our down list over here. So I'm gonna keep it off for now. Nordstrom, I don't like the way this one trades, even when it is in play. I think it's just a more on the choppier side. Volume tends to be a little bit lighter. BTI, I definitely do not like. I think it's just not a great trading stock. But I see you guys trade it, so if you like this one, put it on the list. But I'm not a fan of it at all. All right, let's see what's gapping down this morning. Harry, good morning, sir. Thank you for the $5 bond there. Macy's just named John Wayne as their CEO. Harry,
boy.
my friend, thank you so much for that. You know, if that's the case, I'm going to put Macy's as my possible because we know what could happen there. That could be the best stock today. Here it is, Riot on the gapping down list this morning, leading the way. As Nor mentioned, Bitcoin just getting crushed this morning. You know, if you could afford Lamborghini a couple of months back, you cannot do so now. So things are not looking great in that sector there. You got Riot, you got Mara. Mara seems to be the one I like the most on it. So I'm probably going to watch Mara. Again, it hasn't been great, man. I got to tell you. I mean, I want to jump in on this fund. On the Bitcoin stuff, but it has not been great intraday trades. So I'll put it on here. Maybe today it can surprise us, right? They keep losing levels. We'll see. You have Riot, you have Coin, you have a few that you can watch there. I'm gonna watch Mara, but it might not even stay on my list. MTTR this morning. What is this? It's down 9%, 176. Matterport, whatever that is. Something funky about this daily. I'm not feeling.
Yeah, it's a tech company. It looks like it's trading real thin. I saw this. I don't know what. I couldn't figure out what was going on with it. I just kind of blew it off. It didn't look that good to me.
Yeah. Something about it's not looking right, guys. So I'm just gonna go something else here. AMC, man. This.
I mean, not to mention, if you own this thing last Monday, you're down over 50%.
Yeah, you're hurting.
Oh no, excuse me. I'm looking at the wrong chart. That was a weekly. You're still down a lot.
Yeah, you're still down a lot. Yeah, still down a lot.
Still down a lot.
Still down. You're at 945. Yeah. AMC, guys, just continues to leak here. I mean, this stock was a problem, has been a problem for some time, not just with the market sell-off we're getting now, but I think with the market sell-off, it's just adding on to it. And you can see just the snowball effect you're getting here. These guys are down to $16 today. We do have shares for short selling restriction. This could be fun. It was fun on Friday, I'll tell you that much. Friday was nice. It actually traded very well Friday. Had a beautiful drop in here, as you can see. Did recover as the market tried to recover here, but this drop, it was very clean with tons of volume. So that was nice on Friday. Yeah, we'll see what happens here. We'll keep this one on deck. We have NEO coming up, down 7.6. NEO looks good. Very, very active, guys. 2.2 million shares traded. Yeah, NEO is nice. I like NEO this morning. We'll put that on there. Great volume. SoFi today. Yeah, it has activity. Yeah, it could be good. Possible for now. All right, I'm gonna stop here, guys, because I think we're gonna get the same song and dance as we keep going down here. Today's gonna be one of those days where you can pick literally your favorite stocks that you're great at, and they could be looking really good for a possible play today with the way the overall market is moving. But there's a few on here that you definitely want to have. Kohl's going the other direction is nice there. Even Macy's, I got as a possible, going green
I do
this
want to say
morning.
Coles might be toast at this point. I'm not
It's moved to,
saying
yeah,
it's awesome. I mean, it very well could be played out, but this is one of those rare times when a buyout stock might actually be worth watching. So,
yeah. And it's moved so much in the pre-market already.
yeah,
It's up 33%. It'll be tough for this
we'll
to
see.
do something. We'll have to see. We'll have to wait. Um, Norm, I know you're done for your day already, but anything that you like this morning?
No, I mean, like you said, I think we've got all these tickers. I mean, there's a whole lot of China on here, and there's a whole lot of stuff that there's Bitcoin in China, and then a whole lot of the high growth names that trade with good moves, good volume, good range that we trade on a normal basis. I mean, if you just
Right.
look down the chart, obviously you've called out a few of them: Neo, Lucid, ChargePoint, DKNG,
Yeah.
Tesla. I mean, just Square, Nikola. So you can really pick your poison there and trade what you like.
I agree so much on the list that you can choose from today. Let's take a look what you guys have this morning. We'll start with Ruben. You're giving us Snap. They had a downgrade today. Let's take a look at what's going on with Snap this morning.
They did.
Yeah, that's what he's saying, but downgrade today. They're down 6.8 right now, 281,000. I would think there'll be more volume for a downgrade. Um, but again, it's been selling off so much lately, right? So what's the downgrade to like $34? Because they do that sometimes. They'll downgrade something that's already been past that point. What do we have?
I can't remember if it was a new price target or just outperformed a neutral. Wedbush at
Hmm.
36. So
Okay.
you know
Yeah.
it's
Uh,
down in a sea of red around it.
Yeah, so I don't think that's going to do too much for the stock itself today. I think just the market movement will do a lot more for it this morning. So, um, yeah, I hope I can find something better than Snap on a day like today. Lucid Propeller, let's take a look at that. Lucid from Propeller, our friend there. What we got going on here? Down 6.2, 1.3 million. Yeah, this is good. And you can watch a few of these. I like Lucid. It can be very explosive at times. I do have Neo here already. Great volume as well, 2.2. And man, look at their pre-market activity. Much better than Lucid, really, as far as volume and all that, right? So pretty similar as far as like the activity itself. Both of those are looking good this morning. PFE, on a day like today, I'm not a fan of PFE. It probably won't be one that I will put on my list. Now, can it be in play today? Can it give you some good opportunities? Absolutely. But look at this beautiful drop you're getting here. You're down 4.1, 3.3 million. You're at a nice level here. Look at this. This daily level is pretty good on
They do
PFE,
have
actually.
news on a COVID
Yeah.
pill that's supposed to be approved by the EU for use. I think the first of a few that are coming out.
Okay. Is that by
Um,
PFE or just is that like a taking
it's
money, taking
PFE. That
a
having been
PFE?
said,
Okay.
I hate trading PFE. So,
Yeah, I hate
but
it
I'm
too.
just throwing out that
Yeah.
there is
There's
that
something
is a
out there.
little bit of a catalyst on it.
Yeah.
Yeah.
This is a good drop, guys. This is a good drop. I like the level on the daily on PFE. I'm gonna put as a pass. So I'll give it the benefit of the doubt, but most likely I'll be dropping that off because just so much good stuff to be looking at today. I think here's Apple, guys. Definitely gonna be looking at Apple. Just an overall tech company here. Apple. You have Nvidia. You can look at which has been very very good. If I can type Nvidia, there we go. This one has been very, very nice. Also, great volume today. 1.4, guys, just leaking here. Either one of those are good. I want to be able to watch other stuff in other sectors like an AMC, like a Neo, and like a Coast today if we can do anything else.
I mean,
Um,
Nvidia is almost exactly mirroring the Qs.
it is,
So
right? It's just overall, yeah, yeah,
it's a good proxy. I mean, if you want
yeah.
to play the Nasdaq, it's a good
Hmm.
proxy to do so.
Yeah.
I don't see it as being individually in play, although I'm sure you can grab good trades out of it today. That's kind of a
Yeah.
typical one.
And that's why, like on a day like today, I'm gonna watch Apple, right? Because Apple's pretty much doing the same thing, and it's just gonna watch Apple. I'm not gonna put Apple, Nvidia, AMD. I'm not gonna, jam the watch list with all that stuff. You could just watch one and just keep an eye on the Qs and the SPY, like I'm sure we will this morning. What is Ford doing? Ford, we know had a drop last week, it continues to drop today, man, down 2%. So again, just kind of getting crushed here a little bit. Yeah, it could be interesting. I mean, they're moving a whole lot. They're hold on a second. Let's get the right daily. the right 5 minute. They're moving a whole lot within the intraday, right? This is not normal movements for Ford. They don't do that. So yeah, it could possibly be in play. 2.1 million guys here traded so far this morning, and that's in line for being above average for their pre-market action. So yeah, put us a paso for now. It has proven me wrong more often than not on the last couple of weeks. Here is AMD at the moment. Again, I'm watching Apple, guys. You can watch AMD, Apple, a few of these. Probably even Microsoft is doing something today, right? Yeah, even they got great volume, 765,000. So I'm just gonna stick with Apple. I just don't want to be too heavy on all the tech stuff there, and just look at the QQs, the Qs, like Norm said. Um, all right, there we go. VIX. Yeah, VIX, you can watch that as well. ETF there. NVIDIA, we talked about that. Netflix, the fun over on Netflix. Oh, man, it's a big drop on Netflix. Big drop we saw
It'll be in
last
play
week.
again,
Yeah,
I think.
it's not going away, obviously, right? I mean, this is a huge drop. I think it just might go sideways. Usually, when we get this drops on big companies like this one, they're not going to go bankrupt, right? They're not going to drop down to 120 unless we have something catastrophically go seriously wrong. They just might move sideways. But today, I think there might be better opportunities than Netflix, right? We'll put it as a paso for now. Excuse me, let me mute that, and we'll see where it goes. See where it goes. Netflix. There it is. All right, perfect. Netflix is okay. Nvidia, we talked about. You can watch that one. Apple or AMD. PLTR. What's going on there? PLTR this morning. We have a nice drop today, 1.7.
Same story.
Same story here, guys. You can watch this one as well. I mean, I like the drop this morning. I love the volume, but again, just so many things that look like this today. Mara is a short selling restriction. Yeah, you know what? I'm probably gonna take it off, guys. I mean, yeah, short selling restriction. Not that you cannot trade something on short selling restriction, and you might see a lot of those like this, especially with the drop they've been getting. Look at AMC, short selling restriction as well. If you've been dropping
You're
quite a
going to get a
bit,
lot of those today.
yeah. What's the percentage on that? Is it 8 or
10.
something? 10, right? So if you're down more than 10%, you're gonna have a short selling restriction, right? So you're gonna see a
And
lot
the
of those
next day.
stocks. Yeah, yep. Today because of last week and all that, and because of Friday. Let's take a look at some travel stuff. American Airlines this morning. Man, American Airlines down to $15. This is where American Airlines starts getting very interesting, guys, for long-term type plays, right? Not day trading, but we'll put it on here, guys. 1.1 million. That looks good. CCL, what's happening there? CCL hasn't dropped to the recent lows of December. American Airlines has. I'm going to keep American Airlines, not CCL. I think American Airlines is affected a lot more by everything going on here. Okay, I think we're set. Tesla is trying to curl. Yeah, trying to hold on to some lows from December here. So definitely trying to hold on to that. That could be interesting. That'll be fun to watch. We'll put Tesla on here. All right, we're all set, guys. Over on YouTube, let's pick a few. Ford, we do have American Airlines. Julian, we just had that one. Thank you for throwing that out. Baba, what is Baba up to? Baba looks good too. What is beeping? Oh, it's got to be my tablet somewhere. I'm thinking it's my phone. I got to turn that off later. Here it is, Baba, guys. Yeah, this looks good. I like Baba. We'll throw Baba on there. INTC this morning. No, not too big of a fan of that one. SoFi, we do have on here as a possible. All right, we're pretty good. We're pretty good here. A lot of the stuff you guys have thrown out, we do have on deck. One more here, EXTN. What's this? No, it's not looking too good. Lower price stock there. Yeah, no. It's not looking good at all. So I'm gonna skip on this one, guys, for now. All right, let's get to it. Let's go over to our community events and announcements.
And I apologize, Carlos.
Yeah.
I completely, I mind slipped on this, and I forgot to send you a new one. So just put it up, and I'll get you a new one later today or tomorrow morning.
No worries. We'll just
Put it
keep
up.
going.
We'll
We
talk
have
about
now.
what's this week.
Yep, sounds good. Let's bring this up over here.
All right, quick weekly rundown every Monday. So we've got Brian's Swing Trade Review, 2:30 in the afternoons on Monday in the room. And then onboarding classes and technology, 7 p.m., followed by technology, 8 p.m. And those technology classes are a little bit different. They have a different subject each week this year. So check those out. And then we've got Eamon's trade reviews at noon Tuesdays and Thursdays in the classroom. Success webinars 8 p.m. Eastern on Tuesdays usually. Psychology 8 p.m. on Wednesdays. And then mentoring on Thursday, 3 different sessions. You've got Andrew at 11 a.m., Ed at 4:30, and Thor at 8 p.m. You've also got the new edition, the New Trader question and answer period, 1 p.m. Eastern in the classroom, right, John? And then crypto with Jared at 11 a.m. on Friday. All those times are Eastern. Tomorrow night, 8 p.m., you've got Peter talking about a day-by-day plan to start your trading journey. And then Kreda, who we'll be speaking to in just a couple of minutes here once I get finished reading through this stuff. 5 p.m. note the special time since she is in Europe, so we don't keep her up too late, is going to be talking about trying to take the fear out of taking or holding trades. That's part of her taking the pain out of trading workshop series. Don't forget to check out stocktradingsimulator.com. It is the free web-based replay simulator where you can trade stocks after hours. You can sign up with your email. We don't sell it. We don't spam you. You'll get homework assignments from Eamon each week at stocktradingsimulator.com. And don't forget, if you're watching on YouTube and haven't checked out the room, first of all, smash that like button, please. Subscribe. We sincerely appreciate it. It really does help. And also, you can come check out the room. You go to barebulltraders.com, click that test drive now button. It's on the homepage about halfway down. Use the promo code premarket24. It is not a recurring billing deal. It will only bill you one time. Then it cancels after 7 calendar days, 5 trading days. Try out the room, and if you'd like to become an elite member and gain access to all the webinars, you can use the promo code WINTER40. That'll get you 40% off the annual elite membership. Speaking of, there she is. Good morning, Kreda. How are you?
Morning, Norm. Really good, thanks. How are you?
Wonderful, thank you. I hope you had a great weekend. 2 things. This is the last week, I believe, that we're going to be doing twice a week with you. Your schedule for the year just isn't going to allow it. So we're going to have Kreda on Mondays at least. So we're very thankful to keep you for Mondays and excited to have you twice this week for the last time. Today, you will be talking about preserving your emotional capital, correct?
That's it. Yeah. So, yes, I'm still here. Don't worry, but just things are really, really busy. So I'm trying to keep doing a little bit of everything. So that's why it'll just be Mondays, but I will be here every Monday. And also just to clear up in the chat discussions last week, I'm not Canadian or Irish Canadian. I'm just Irish. So
just Irish.
Yeah, from Dublin in Ireland. That's where the accent is from. So today we're talking about preserving your emotional capital. And this is a concept that actually one of the BBT members was talking to me about, had been reflecting on themselves and thought that other traders could actually benefit from, thinking about it this way as well. So I said that I would use one of the sessions to talk about it. So this is probably most relevant for people who struggle with revenge trading or ignoring stops or ignoring loss limits, so daily loss limits. So people that tend to push themselves past the boundaries of when they should stop. But it could resonate with other people, but I'm going to talk about it through this lens today. So it's very hard to actually trick your brain when you're in the middle of if you've taken a few losses or things aren't going your way and your emotions start to get a bit off kilter. So you're getting frustrated, you're getting angry, you're feeling like you want to get back at the market. All of those emotions are rising in you. It can be very hard to try and stick to your rules in the heat of that, because when you're thinking, I should actually stick to my stop or to my daily loss limit today, you're thinking in terms of money. And so that's an outcome focus. So it can be hard to actually trick your brain around that. And especially if you're somebody that has trouble with sticking with those rules, trying to tell yourself, I shouldn't do it, is probably, you would have done that already if that was going to work. So what I want to present to you today is just a different framework or a different way of thinking about that. And so that's, instead of actually thinking about preserving your financial capital, which ties itself to thinking about the outcome. Think more in terms of preserving your emotional capital. So what do we mean by emotional capital? So that would be all of the emotional state that allows you to trade at your best. So being patient, being calm, not imposing yourself in the market. So being willing to actually read what the market is telling you, thinking clearly, but just generally being in a very calm, composed, neutral state so that you're not trading out of negative emotions. So that would be high levels of emotional capital, because when you're in that emotional state, you can trade well. But it's normal, very normal, that if you take losses, if you're making mistakes, that can kind of get chipped away at and start depleting. And that will happen at different rates for different people. So for someone who has a lot of mental skills, has worked on this a lot, or maybe they're just very naturally resilient and it comes easy to them, they may be able to preserve their emotional capital at a high level even when they're taking losses. And that's brilliant. But if you're someone that finds that actually your emotional state kind of degrades and degrades as you're losing trades or as things are going against you, then it's something to be really aware of. So of course, there's techniques to help you keep your emotional state at a certain level. So if it starts depleting, you can take actions to try and hold it there. And we'll talk about that in a second. But it's helpful to have a stop point where you actually are monitoring your emotional capital. And so as you find that you're getting more frustrated, you're getting more angry, you're getting further away from being calm and composed and all of those other emotions that help you to trade well, it can be helpful to rate that on a scale. So we've talked about this before in terms of rating your PEMS, your physical, emotional, and mental state, but we're just lasering in on emotional today. So it might be that you actually have a limit for yourself, that if your emotional capital drains and you get to a 5 out of 10, that at that point you walk away for the day. So you're not even necessarily looking at stopping for the day from the perspective of the financial side of it, but actually in terms of how you're managing your own emotions. And the reason why I'm suggesting that is because, and as I was talking to the BBT member about this, the more that you find yourself losing and having runs of bad days, so a run of bad performance, that can really eat away at your emotional capital over time. And because trading is a marathon, it's not just a sprint, you need to be able to preserve that, to be able to go back into the market the next day feeling neutral, feeling reset, and being able to trade better the next day. Whereas if you completely decimate your emotional capital, it's likely that you're going to have an emotional hangover. So you walk away from your trading that day, maybe you've completely blown your daily loss limit, you're angry at yourself, maybe it's carrying into you're being angry with your family, and I hear that a lot where people carry what's happened in trading into their personal lives afterwards. So you're dwelling on mistakes, all of that. It's hard to come back from that and reset to neutral the next day, but it's better to have one bad day than one bad week. So if you can have a system or a way of thinking about this that helps you protect and preserve your emotional capital, it's likely going to actually help you in the long run. So even though you may still have the bad day, you're thinking about it in terms of keeping yourself in the best emotional state to trade well, and allowing yourself to jump out of trading before you absolutely decimate that emotional capital. So if you get to a 5, you go, okay, right, that's it. I'm not in a good state to be trading now. So I'm going to shut off the computer and I'm going to come back tomorrow. And then you can actually try and do some things overnight that are going to, or, after you finish trading, that are going to actually help to bring your emotional capital back up. So some ideas of practical things that would help that. So let's say you're trying to actually bring your emotional capital up while you're still trading. So you think, I can salvage this. I recognize that actually my emotional state is starting to slide down the scale. So what can I do? Things like, taking a minute break, stepping away from the computer and doing 3 minutes of meditation, stepping away and doing some progressive muscle relaxation exercises, or just simple breathing exercises. Even someone that I worked with used to go for a walk around the block and come back just to completely reset. So in that way, you can do something practical to try and stop the drain from happening and recharge, and then come back and you can assess again. So you rate your emotional state again. And if it's okay to go back and trade, so let's say you got to a 6, you walk around the block, you come back, you're a 7, then you're like, okay, actually I'm handling this. So there are examples, just a few of things that you could do while you're trading to try and bring that up. But the key thing is to be aware that it's depleting and be mindful of how quickly it's depleting. So be aware of the rate at which it depletes for you. And then let's say you're someone who has hit their max loss in terms of emotional capital. You've stepped away from your trading. What can you do after the trading day is finished in order to try and bring that back? So things like going back and maybe reflecting on good performances. So if you had a really good month and you have all the stats on that, maybe you spend some time just dwelling on that and really boosting your confidence. Maybe it is that you're completely switching off from trading and you go and you do something that is really enjoyable, that you don't often give yourself permission to do. Maybe it's something indulgent, but you're actually kind of, instead of punishing yourself for a bad trading day, you're actually going and rewarding yourself for preserving your emotional capital. So in this way, they're just some quick examples, but I'm sure you can think of more yourself. But in this way, you're actually framing it as something positive, where it feels like a punishment to have to stop trading because of, you've hit your max loss. If you're thinking in terms of preserving your emotional capital, it's actually a more positive focus. You're doing something constructive to help yourself, and it's not directly linked to the P&L. So that's just some tips to frame how you're thinking about your emotional state while you're trading, so that you can trade or live to trade well another day.
That is excellent advice, and I really like that last piece at the end where you're talking about taking a break as a positive as opposed to some kind of a negative against you being able to trade. So thank you very much, Creda. Much appreciated.
Thanks.
We'll see you Wednesday. Hope you have a great couple of days.
You too. Bye.
All right. Thank you so much.
Now,
Creda,
what
for
did you
that.
do to the poor lady when I was gone last week that you guys accused her of being Canadian?
You know who did that, not me.
I know who it was.
Peter. Peter, by the way, reporting no SPACs and no IPOs this morning, and Peter's putting out his watch list: AMD, Coase, Lucid, Ford, American Airlines, and PFE. Yeah, give me. Oh man, that was fun. Guys, shout out to Creda so much for all the. I always, again, I become a viewer when she comes on, and then I got to remember, okay,
Yep.
I'm actually doing something.
We'll
Let
switch
me
back. I
let me
do the
sit
same
up
thing.
and let me get going. So, thank you so much for that, guys. Hit that thumbs up over on YouTube. We appreciate it very, very much. Let's get going here, guys. Someone mentioned Piton. I actually saw Piton earlier before we got on the show, and yeah, this thing is just getting crushed. There's so much negative stuff around this here. There's even stuff with the board that they want the new management. It's just
Yeah, but did you hear that? I guess on the first episode of the new season of Billions, that guy had a heart attack on the bike.
and it was it a Peloton?
Yeah.
I haven't seen it.
It was just like in the Sex and the City deal where Mr. Big had a heart attack and died a couple of months ago. Except for, I guess this one was shot. What I read was this one was shot in advance of the other one, and they didn't know. And then in post production, they edited the voice, and it's like, I'm not going out like Mr. Big or whatever.
Oh no way! Yeah, I
Because he
haven't seen
lived,
that.
he didn't die. He got a heart attack, but he didn't die. Yeah.
Oh, nice.
Anyway.
All right, guys, here we go. So Piton, yeah, this could be a good one. I like Piton actually. I mean, this thing has its own stuff going on. It just has not been great for them. They're down 3.9, yeah, and they've been trading very decent actually. This pre-market looks very, very good this morning. All right, let's get to it, guys. We have Coase, we have AMC looking good this morning. We have Neo, Lucid, Apple, and Piton right now. So I got a top 6 there. And again, your list could look completely different today and still have an incredible blockbuster type list. It's just that kind of day, right? Let's do some levels. Coase might be a little bit extended now, right? They're up 32%. They had a nice run even after the gap up, right? You had a nice gap up here very early on, went flat for a little bit. And usually here's where a lot of stocks tend not to do anything. They just kind of go sideways into the market open. This one did not do that. You got volume, you got a drop, and then you have another breakout here with some decent volume, right? So let's see how much juice is left for this at the open and how that is going to trade. Again, up 32% could be very extended, but if the catalyst is very strong and people won't believe in what's happening, it can move higher or it can go sideways. But up 32% is quite a bit here. High of the pre-market 63.81 at the moment. The low of the pre-market is probably not even as important because it's all the way down here. You already have a level that's pretty good here, which is this one. This highs, the highs from the last two trading days right on here. So you want to keep an eye on that one. That is actually more impressive level, because if you look here going back to December, you got a couple of days slamming up against that level there, right? So that could be interesting as far as that. Heading towards the top here, above the highs and lows of the last two trading days, you have this whole, oh, what's that? Our epic pen is too big. There they go. You have this whole area of activity before we start even getting to our price action. We're going to mark down here 62.54 is good. Then in here, I'm going to mark only this one. I'm not going to go crazy. This daily doesn't look great to begin with. So I'm just going to put in 58.41 in here. Maybe 56. Yeah, that's it. Maybe 56. But I don't want to pack this with level. I think these two are some pretty good, decent levels here that have a lot of touches, right? Can you mark this one here? Yes, you can. You can mark this one here, but there's no other confirmation as far as, heading this way. There's no more confirmation on this level. This one here, 58.41, I got tons of confirmation there, right? You can see that. Same thing with this one here, some good support happening here and here, right? So that looks good as far as that. And then, I think we're all set on the coast there. Again, I don't want to put too many levels on this thing. Here's AMC, just continues to plummet here. This thing started doing bad before the market started doing bad. So this thing's on its own, just has not been great. Low of the pre-market is 16.44. Again, on short selling restriction, you can still trade this. We do have shares for sure, as you can see up here with the .S, right? So that means short selling restriction, which applies, guys, to any to all brokers, right? That's not broker related. And then the S, that is broker related. That tells you that your broker does have shares for sure on this stock. If you're using a different platform, it might be a different indicator somewhere else. But heading back to the left here, going back to May, June timeframe, we're going to see, do we have any good levels below this 16.45, which is our low of our pre-market right now? Looks like in here, maybe 13, man, 13.60. And then I'm going to take this day here. I'm just going to take this one over here, 14.67. So that's plenty towards the bottom there. And I like the fact that we're confirming some of that over here as well. As you can see that there and here. So that's good. Yeah, so that's pretty good towards the bottom. Then towards the top, guys, you have the highs and lows from the last two trading days, previous day close. Just tons of stuff happening over here. I don't think you need to add anything else. Let's head down to NEO this morning. NEO taking a nice drop. I'm going to mark this down here. Even if we lose it, 25.24, I'm going to mark that down. That was the previous low of the pre-market there. It's a little bit lower now. But, that held on for a bit. We're losing that now. Let's see if we're going to come back up. Either way, I think this level will be a good one to have here. And no matter what the pre-market low is going to be, we can also add the pre-market low there as well. Heading to the left, we lost this great level this morning, actually, right? But all throughout the month of December and January, we've been bouncing off this level here. So this 27.90-ish has been, actually the previous day close, 27.35 has been a big level for NEO. I mean, just look at all the support you're getting there. It looked like it was going to turn things around, and now we're slamming to that level on Friday and below that today. So, man, they are getting killed here. Let's go back to, when's the last time we were down here? October 2020. So October 2020, we have a couple of days in here. I'm going to put down 23.86. That's good there. In here, there's not a major level in here, right? In between this area, you have all the previous day close, highs and lows. That's all good. This level here is good too. You got to bounce. In here, there's not a whole lot, right? So don't put too much weight on this level, guys. I'm going to mark down 26.24. And that is really just an area. I just want to have something midpoint between where the price action is now and the previous day close and the highs and lows of the last two trading days. So just want to have something in between here. But again, it's not a major level like the other ones we're seeing, where you're getting a lot of bounces and change in direction from. So that's good there. Lucid this morning, also very explosive. Let's get rid of some levels here that are overlapping now, our highs and lows. These over here. If I can delete. There we go. Get rid of those. Low of the pre-market right now, getting a little bit of a bounce. 35.17, slammed one there. And then towards the bottom, we have 33.66. So that is good there on the daily. Good area of support here. You got a lot of touches on here. And some pretty good bounces off of Lucid from this 35.43 where we are sitting right now in the price. Let's see if that's going to stick. If we were to lose that, we got another one, 33.01. Right on there, beautiful daily here when this thing was heavily in play. You guys remember this. We had a lot of fun in November with this stock, right? Just traded very well, very explosive. Actually, That fund started even before. In October, you saw that the little breakouts there starting to happen. All right, so that's good. Here, guys, I'm going to put a level here, 28.53. That's the only level I see there. Then you have the breakout over here. But, I don't think we'll get there today. That's a stretch, but we'll see. Highs and lows from the last 2 trading days are doing a pretty good job towards the north side of things. So you don't need to add anything else above the price action, really. Apple's looking very good. And as you can see here, look at the levels we have here, guys. Right. So these levels, we put them on here before these highs and lows were created. And you can see now that 164.26 became a low from that day. This 167 is still here, so that's still good. But for the most part, you just get rid of what we have here. Get rid of those, and look at that. The highs and lows are kind of basically doing the job for us now. So you want to keep those levels on there. Obviously, they were important for this stock. They might be important today as well. Low of the pre-market sitting at 158.50. And again, as we continue to drop here, guys, got a couple of more down here over at 156.49. And then right up here, I like this one. And you might ask me, why do you like this one instead of that one? Well, this one has more confirmation, right? The more confirmation you have on a level, the better, the stronger that level is going to be. You have one day here just on it by itself. Yeah, can it bounce off of that? Yes, absolutely. We never know what's going to happen, but most likely more traders are going to be looking at this line here, right? If you're the only one looking at a level, guys, right? If you're the only one looking at a level, that's not important. You need to see where's everybody else most likely going to put a level, right? And people like to put levels based on pivot points like this, where they're seeing a lot of bounces, a lot of resistance. That's where people are going to put their levels, right? If you have a level by yourself over here and think you have a secret sauce, no, you don't. That's not going to work. You need the traders to also be looking at the same thing. Piton this morning, guys, we are low of the pre-market here, 25.86. That is good. And then once you put that, I think you're set, guys. I mean, highs and lows from the last 2 trading days are surrounding the price action. You do have high of the pre-market here at 28.01. It's good. And yeah, I think you're pretty much set there. All right, guys. What else do we have here? Let me see. I think we're good. Moderators lineup. Brian coming in with his list. So let me bring this over. Here we go. All right, Amen, not liking anything much today, so pretty much no list at the moment. Mike, nothing right now. Just gonna check out what the market open does. Peter, I gave you that already. No IPOs, no SPACs. Peter has his list there, which we read out already. Thor's looking at Apple, Coast, Lucid, PLTR, Dima, Coast, Apple, American Airlines, and Baba. Brian is looking at Lucid, Apple, TNA, and TSA, and also the scanners. And Tiffany's looking at Coast.
Just to clarify.
Oh, sorry, yeah, TZA. Tiffany's looking at Coast, Neo, and NVIDIA this morning. So, again, guys, exciting times for sure, especially to be in day trading. It's a lot of good stuff happening here. John coming in with his list, Apple and Coast for today. And I think we are all set, guys. 9:15 coming up. Andrew and Brian are up next. They're going to be trading live for us this morning. Do not forget, guys, today we have our onboarding class at 7 p.m. Eastern time, followed by our tech class at 8 p.m. So do not miss out on those to start the week. If you haven't checked us out over on YouTube and you want to see what the environment is like, what the community is all about, definitely sign up. It's $24 for the 7-day intro membership, and you can try with pre-market 24. Just use that discount code, and we'll see you tonight. And you get access to both chat rooms, the main chat and also Ed's chat. So take advantage of that. All right. Norm, I think we're all set. Anything else we might have missed? I know.
That's all I got. We're in for some volatility, so be careful, guys.
Yep. Guys, hit that thumbs up. Sitting at 173. We know we like that 250. So if you could take 2 seconds and just hit that button. I mean, we promise we will not charge you over on YouTube. It's completely free, but it does a whole lot for us. So thank you so much for that. And if that doesn't help you, maybe this can promote things a little bit, right? I know you guys asked me for this picture last week. We'll put that on here. Maybe that can help us get some likes there.
I'm hungry.
And if that doesn't do it, maybe this one does. I don't know. I'm just throwing out all signals that I can this morning. Guys, take care. Trade safe. And we will see you all on tonight on boarding class. Have a good one, everyone.
Take care, guys. Trade safe.